For many years, South African and African companies have considered Mauritius to be the go-to platform when it comes to doing business up in Africa or elsewhere in the world. Mauritius has also become a very popular lifestyle destination for individuals. But like most things, it's evolved over time, and Sashin, Keelan, and I are hosting a series of webinars to update and offer fresh perspectives on how Mauritius remains the international financial center of choice for South African corporates, funds, asset managers, and private individuals. So, good afternoon and welcome, everybody. My name is Colin Grieve, and I am the South African Chief Representative Officer of Fraser Bank. I'll be the moderator of this afternoon's panel discussion and say a few words afterwards. But first, I need to get some housekeeping out of the way. So, please address your questions to the chat box, and at the end, we'll take as many as time allows. Please wear a headset for optimum audio quality, and a replay of this webinar will be available on social media afterwards. Now, in terms of ease of doing business, the World Bank ranks Mauritius 13th out of 190 companies globally. And I'm going to kick off by asking our first panelist, Sashin Mohabir, who is Assistant Director and Head of Department at the Mauritius Economic Development Board, to briefly run through the advantages for non-citizens using Mauritius. Sashin. Sashin, you're muted.
Thank you, Collins. It is with great pleasure that I am among you today for this webinar. So why Mauritius is so attractive for retirees and non-citizens? It is not just because it is a tropical island, and like many tropical islands, it is lush green and colorful vegetation throughout the year, but also because the investment and business climate has been made easier. You can decide to come to Mauritius at any time once the borders are open, and you will be sure to have a comfortable weather during your stay, a luxury villa or an apartment to stay, and a very good healthcare system. The Mauritian government is promoting openness. We want to attract more foreign investors, talents, know-how, retirees. So if you want to invest, work, live, or retire in Mauritius, occupation permit, residence permit, young professional occupation permit, or the permanent residence permits are granted that allow you to reside and to work in Mauritius. An occupation permit, for those who are aware, is granted to investors, to self-employed, and professionals having a contract of employment with a company in Mauritius, and is issued for a maximum period of 10 years, renewable thereafter as per established criteria. In a nutshell, Mauritius can be regarded as a country with a low tax jurisdiction, with low corporate and personal taxes, business-friendly regulations, a stable democracy, a country that is pleasant to live in with excellent telecommunication and good healthcare and education facilities. It offers a safe, stable, and predictable environment, a great place to live with future-ready infrastructure, global connectivity, and world-class talent. Endowed with all these attributes, Mauritius has a secure judicial system and a legislative framework with a judicial committee of the Privy Council at the highest court of appeal. The Mauritius International Arbitration Center has certainly helped the island to position itself as an investment hub in the African region. As Colin just mentioned, Mauritius ranks at the 30th position in the last World Bank Doing Business report. The country is continuously improving its business environment, and the Economic Development Board is here to help and facilitate investors in setting up their businesses in a seamless manner. Mauritius is seen as a low tax jurisdiction, with a standard tax rate of 15% for both personal and corporate income tax, no withholding tax on dividends, and there are no capital gains tax. Tax holidays over a period of 8 years are provided to a number of innovative activities, smart cities, among others. There is no exchange control in Mauritius, and the principle of free movement of capital is acquired. It is therefore possible to send some funds invested, profits, capital gains, and dividend outside the country without any restriction or particular formality. With respect to taxes, there are no taxes on dividends, as I just said, on capital gains or wealth tax. There are no inheritance taxes for direct descendants. There is no property tax or housing taxes for those who've bought a property in Mauritius. The only real estate tax is due on purchase of any movable property, which is levied at the rate of 5% of the purchase price. Thank you, Colin.
Sachin touched on a number of fiscal advantages that are attributable to the island. And we are very fortunate to have on our panel Clarsen van der Walt, who is the international tax partner at Regan van Roy and is based in Mauritius. Clarsen, I know there have been a number of changes to the tax regime in Mauritius. Perhaps you could summarize these for us in a nutshell. And does it mean that every single company, global company in Mauritius will pay 15% tax?
Thanks, Colin. Yeah, as Sachin has explained, Mauritius does have a very stable and attractive tax regime. But as we all know, there have been some big changes to this over the last couple of years. And I think it's important to understand the context. So since the mid-2000s, the OECD and the EU have been quite vocal in shutting down what they call harmful tax jurisdictions or harmful tax practices. And Mauritius has been in their sights. So for a few years, Mauritius was on the so-called grey list in terms of unfriendly or essentially as unhelpful tax jurisdictions with what they saw as a concerning tax regime. And that is why in 2018, it was announced that the GBC2 regime would fall away and the deemed credit regime as well. So the context is that Mauritius wanted to stay on the right side of the global watch bodies, in particular the OECD and the EU, so that it could be seen as a good guy in terms of tax jurisdictions. So what Mauritius had to do was get rid of the GBC2 regime, which was a special type of regime for entities that were sort of tax resident in Mauritius, but not subject to any tax in Mauritius, and also the deemed credit regime, whereby all foreign businesses were entitled to claim an 80% deemed tax credit, so they only paid an effective 3% rate. So those two regimes are coming to an end now on the 30th of June, and thereafter all companies will be subject to a flat 15% rate. The other changes that were brought in line with Mauritius trying to kind of keep itself on the right side of these global watch bodies were increased substance requirements in terms of what entities have to show in Mauritius to ensure that they can be seen as tax resident in Mauritius, and also CFC rules. So they're, in a nutshell, Colin, the main changes that we've seen in recent years.
Now, Clarsen, we hear of partial exemption regimes, the foreign tax credit regime. Exactly what are they, and how do you determine what is the best option for a company?
Yeah, this is something we're very busy with at the moment. So up until the 30th of June, every global business operating in Mauritius could just claim the deemed credit and pay 3%. Now you are effectively, subject to a headline tax rate of 15%. However, in practice, there are a number of very generous relief regimes available to you. So there's kind of three main ones. The first one is what's called the partial exemption regime, which applies to certain types of income, and that covers foreign dividends, interest, CIS funds, income from shipping and aircraft leasing, income from international fiber, income from reinsurance activities. So quite specific bands of income. All of those are deemed to be 80% exempt, which means they will be subject to the 3% regime as before. So that's, in our view, actually the least interesting form of relief, because it's quite narrow. But if you fall within one of those bands, great news, you're still going to pay 3%. The next tranche of relief is tax holidays, which Sachin referred to. So Mauritius has 19 tax holidays, which is very generous for a country that already has a low tax rate. Now, some of these are very, very specific. So, for instance, if you're building a marina or if you're doing peer-to-peer lending, but some of them are very general and can apply to businesses that are providing services across Africa, which we're seeing more and more is the typical client that is using Mauritius as a base. So two that are of particular interest are what's called a global headquarter company tax holiday, whereby if you have a company in Mauritius and you're providing at least 3 head office type support functions to at least 3 entities within your group, they don't have to be held by you, but just part of your group, then you get a full 8-year tax services one. It's similar to the global headquarter one, also about providing services to at least 3 entities, and that's any type of corporate finance advisory, financing, funding, credit notes, any of that, and that applies for 5 years and only requires 4 staff. There are also high-tech types holidays and R&D type holidays. So there's the partial exemption regime, which is very generous, very easy, but applies to a specific tranche of income, in particular CIS and reinsurance income. There's 19 very generous taxation holidays, which apply particularly usefully in a group context. And then the third main tranche is the foreign tax credit regime. Now, Mauritius has a very generous foreign tax credit regime, and particularly where you are in a situation where you're part of a group that is operating in high tax countries, often suffering high withholding tax, which is 99% of the time the case if you're part of an African group, then the likelihood is that you will not need to pay any tax in Mauritius. So what we often say to our clients is, these changes are not bad news. If you are conducting a meaningful business across Africa and are using Mauritius as your base, what you end up with now is a situation where your headline tax rate is 15%, but your effective tax rate can be 0% or 2% or 3%. And Mauritius has now put itself in a situation where it's off the grey list and the kind of suspicions of bodies such as the OECD and the EU. So in our view, there's a lot of, it's actually a better story for many companies going forward and a more sustainable long-term way to avail of a low effective tax rate.
So Keelan, if I get the message loud and clear from you, is that Mauritius does make sense as a jurisdiction for holding companies for South African businesses. Perhaps you just might want to touch on what are the alternatives, and then also give us a quick summary of changes to the looping provisions by South African Exchange Control and how this affects South African holding companies.
Sure. And if I can, I just see a question popping up on this 15%, that it sounds quite high. And maybe just to touch on that again, what we're saying is that the headline tax rate that applies to everyone is 15%. But in many, many situations, and almost always where you're part of a group focusing on Africa, your effective tax rate will be substantially lower and can even be 0% in many situations. So just to put that on the table clearly, because we know that there is a lot of concern out there that Mauritius now is a 15% effective tax rate. That is often not the case. So in terms of your question, yes, Mauritius, we feel, and obviously it depends on each client's scenario, but Mauritius makes a lot of sense for Africa in particular. And the main reasons are not tax related. So anyone who's operating in Africa knows that the 2 big risk factors are, first of all, currency. You're operating in multiple volatile currency. And second of all, exchange control. You can earn, it doesn't matter how much money you earn in Zimbabwe, but if you can't get it out, it doesn't really matter. So the benefit that Mauritius has is that it's got a very strong double taxation treaty network, a very strong bilateral investment treaty network, and you can conduct your business here in any currency without any exchange control. So to be clear again, from our perspective, the main benefits of Mauritius from a structuring perspective are not tax, the fact that it also has a very straightforward and favorable tax regime is an added benefit, but not the only driver. In terms of the loop prohibition, this has been big news in South Africa, because South Africa has historically had a prohibition against South African persons, that can be a company or an individual, holding shares in a South African entity via an offshore entity. So it wouldn't be possible for, let's say yourself, Colin, to hold shares in a Mauritian company, which then holds shares in a South African entity. Now, as part of a gradual relaxation of the entire SARB regime, the restriction, the prohibition on loop structures has now fallen away. So in theory, Colin, if you can go ahead and set up a company or a trust in Mauritius to hold your South African shares. So that has given a lot of interest to South African clients in particular. And it's not just from a tax perspective. It's often beneficial in terms of a legal perspective, in terms of estate planning and other kind of secondary taxes, and also in terms of bilateral investment treaty assistance. So I don't want to go into it in too much detail on this call, but in situations where there could be, for instance, a risk of expropriation, being able to invoke a international bilateral investment treaty to rely on if, for instance, the South African government were to threaten the expropriation of land owned by a Mauritian entity, could be very beneficial. So we see that there is a lot of interesting scope to explore with this loop prohibition having been restricted. Just to note that the general move with the SARB relaxations has been, so although the Reserve Bank or SARB rules have reduced over the last couple of years, the move has been that the tax rules are taking over instead. So for instance, the concept of exchange control emigration is now being replaced with tax emigration, and that becomes the function. Similarly with the loop prohibition disappearing. So now you can hold your South African shares via an offshore entity, but you will not be able to get some of the kind of obvious tax benefits by doing so. So for instance, now if you're a South African resident holding shares in a South African company, you would suffer 20% withholding tax. Obviously now the loop prohibition having fallen away means that you could, in theory, insert a Mauritian company in there and in theory reduce your withholding tax to 5%, because if you pay a dividend from South Africa to a Mauritian company, the withholding tax is 5%. However, the tax rules now in terms of the loop prohibition do not permit, what they do is then ensure that your dividend receipt is taxed at 20%. So just to note that what people might think of as the obvious mischief you could get up to by inserting a loop structure is not possible, but there are a lot of benefits to be obtained, and in particular from a risk protection perspective and in terms of secondary tax, and by that I mean tax on ultimate emigration or estate duty tax.
Great, thank you, Keelan. If I can go back to Sachin for a moment. Sachin, so far we focused on companies, but Mauritius has also been a destination for individuals such as employees, entrepreneurs or retirees. Can you please tell us about the new residency rules in Mauritius, the new permit system, the premium visa, and then perhaps if I could ask you to wrap up with your view, your take on whether there's still a favorable business climate in Mauritius. We're all suffering from the COVID pandemic, but I'd very much like to hear what your take is on the business climate.
Yes, Clint. In terms of residency, we can say that the rules have been made quite easy in Mauritius over the past few years. In brief, you get residency as an investor. Here you need to invest at least 50,000 USD in a business activity, and then that company should start generating a turnover of 100,000 USD annually, and that from the third year of operation. As a self-employed, you need to invest at least 35,000 USD in your venture, and then generate an income of at least 15,000 USD annually, also as from the first year of operation. And as a professional, you need to have a contract of employment and earn at least 50,000 USD per month to be able to be eligible for an occupation permit. And the occupation permit is issued for a period of 10 years outright. Previously, it was 3 years. And since the last budget in June 2020, it has been extended for a period of 10 years. As a non-citizen, you also can acquire a residential property, USD. And that residence permit is granted to the spouse and members of the family. Here, let me add that the real estate sector in Mauritius is very well regulated with major property developers, and Mauritius has a robust legal framework. So, as investors, or if you want to acquire property as a second home or to have it as an asset class, you have a choice of properties to choose from under the different property schemes, the IOS or yes, the PDS or the Smart City, as I just mentioned. On top of that, the residential properties are developed with high-class amenities, facilities, and other recreational facilities like golf, marina, and other sports facilities. You may acquire these residential properties as an investment or for second home, and these may be acquired on the basis of a plan. So off-plan sales is possible, and you can structure your acquisitions under different legal structure, be it a company, a trust, a foundation, or it could be under your own name. Residence permits are provided to dependents upon acquisition.
I see Session
seems
disappeared.
Seems to me that we've lost Session. Okay. I don't know what happened there, but
Oh, he's come back again now.
he's come back. He's come back. So, Session, you need to turn your audio on.
Yeah. Can you hear me?
We can hear you, but we can't see you, Session.
It's okay.
That's it. Thank you.
So in terms of foreign nationals who can retire in Mauritius. So any foreign national above the age of 50 years may also choose to retire in Mauritius and obtain a residence permit following a monthly transfer of 1,500 USD, which is for that person's own upkeep. In addition, a retired person who has acquired a residential unit from a PDS company relating to senior living is exempt from income tax in respect of any income derived from outside Mauritius during 5 succeeding income years by a retired person or his spouse or common law partner. A non-citizen can come in Mauritius under a business visa, which is for 120 days, or under a tourist visa for 180 days. If that non-citizen intends to reside to Mauritius for more than 180 days, more than 6 months, he can apply for a premium visa. And the premium visa is granted for 1 year and is renewable. You may apply for a premium visa if you're a tourist, retiree, professional, or a digital nomad by going on the website of EDB, that's edbmauritius.org, and an e-visa is granted online. The requirements are simple. You need to show evidence of enough monthly income to sustain a living in Mauritius. Adults have to show that they have at least 1,500 USD and a child 500 USD. You need to have an insurance cover for the initial period of the stay. As all visitors, a premium visa holder has to follow the health protocol in place that are going for a 14-day quarantine. As for accommodation, the holder can stay in a hotel or another accommodation. Children may also enroll on a private paid school. The holder of a premium visa cannot enter the Mauritius labor market. The main place of income should be outside Mauritius for those coming under the premium visa. As I said earlier, we also grant permanent residence permit for a period of 20 years, and this is granted to those investing at least USD 375,000 in a qualifying activity. These could be in ICT, in media, in knowledge, in education, tertiary education, in manufacturing sector, in textile or in fashion, in logistics, distribution, in the food sector. It could be in seafood, biomedical, in hospitality, life science, in financial services, and fintech. Talking about financial services, let me say that the Mauritius International Financial Center offers a panoply of competitive financial products and services, including private banking, global business, insurance and reinsurance, investment banking, global headquarter administration, among others. Banks in Mauritius provide specialized services such as fund administration, custodian services, trusteeship, structured lending, structured trade finance, international portfolio management, investment banking, private client activities, treasury, and specialized finance.
Thanks, Sachin. And in fact, I would just like to carry on that thought and just mention that there are 19 banks in Mauritius, of which 13 are foreign-owned, with 4 domestic institutions, which includes a Fraser Bank. And the sector's total assets amount to just shy of $44 billion, of which nearly 2/3 is held by non-residents and global business companies, which gives you a very true reflection on what an international financial center Mauritius is. What makes the Fraser stand out is the fact that we've had a representative office in Sandton, Johannesburg for more than 11 years, dealing with South African companies, funds, asset managers, financial institutions, and private individuals. Our South African office is staffed currencies. At a Fraser, we can open accounts in 28 different currencies and facilitate outward payments in 125. For those who may not be familiar with the Fraser brand, I must mention that we are licensed and regulated by the Mauritius Commercial Bank and Financial Services Commission, as well as the South African Reserve Bank. We have 3 principal shareholders, namely IBL, which is the largest listed group on the Stock Exchange of Mauritius. There's another significant shareholder in the form of the National Bank of Canada and a Singapore-based fund by the name of Intra-Asia Capital. It's just a couple of facts and figures I'd like to highlight, and that is that we have clients from over 160 different countries across the world. 60 clients from 60 countries use our global safe custody platform, and we have $3.8 billion in total deposits and a further $1.1 billion under administration. At this point, I see Yaku is on the screen. At this point, I'd like to briefly break away to Yaku. Yaku Clarsen is the former CFO and now consultant to the Global Voice Group in Cape Town. He was very kindly offered to come on air and share his testimonial about using Mauritius as a jurisdiction and a Fraser as a bank. Yaku, if I could just ask you to click on audio on and video on so we can see you.
Can you hear me?
Yes, we can hear you, Yaku.
Okay, let me just see where I can put my camera on. For some reason, I can't get my camera on. Oh, there you go. There you go. Can you see me?
Thank you, Yaku.
Hi, good afternoon, everyone. My name is Yaku Clarsen. I'm the former CFO of Global Voice Group, and now I'm like a management consultant to the group. Now, in short, Global Voice Group, we're a telecommunication company, and we do mostly assist governments and regulators and central banks. We assist them with their telephony needs. What we basically do is that we provide them with some digital tools, like for instance, data monitoring, voice monitoring, mobile monitoring, and that's just a little bit background of the company. How I got to know Fraser Bank is via referral of one of their clients. And we started our banking relationship in 2011. So, I mean, it's nearly like 10 years that we've got this very good banking relationship. I'm based in Cape Town. The GVG Group's finance office is based in Cape Town. And that's how I got to know Colin and Ravi and the whole team in Joburg as well. Now, I must tell you, for the last 10 years, I mean, we've tried, business relationships with different banks in Spain, the UK, and all of that. But I can tell you the only way to do business in Africa is using the platforms that the Mauritian companies and Fraser can basically offer you. I mean, for some reason, and I don't know why, but, the European banks, there's always a little bit of this and a little bit of that. For me, like I said, we've tried it, but the best platform is the Mauritius and Fraser. Also, like you've got very favorable, like Colin mentioned, very favorable tax treaties between the African countries and Mauritius as well. Now, some of our experiences, some of the services that we've been using is like normal business banking from a day-to-day point of view, USD, Euro, GBP, we do Australian dollar. And the nice thing is that we found, which is great, it's like you can actually open, like, say, 2 or 3 USD accounts, like, say, use one as a salary clearing account, one as a supply account, one as a business account. So there's no limitations to that, which is really great. Another thing is that they offer credit card facilities, the prepaid and the normal MasterCard that like, for instance, one of top management has got like a credit card, and you can use that all over the world. You can, I think they've got USD. We use USD, but you also can have Euro. Then most of our business is done via tenders. So normally you need some bid securities or performance guarantees. That Fraser has been brilliant with that. I mean, that is the major part of our business. With a tender, normally you have to do all the documentation, but if you don't have the bid security or the finance behind you, there is no way, that you can actually that tender be accepted. Also, for some projects in Africa, normally what we do is, like I said, we work with the government, so it's like quite a big project that we do. Fraser also offers trade finance. That you actually just, you can, and normally I speak to Colin about that, or Ravi, I mean, they're always there to listen. And, maybe if we cannot do something together, they'll say, listen, maybe we can do this. So what I actually want to explain is it's a very personalized experience. It's like, for instance, I can phone Colin or I can phone Ravi, and if I can't get hold of him, there's a dedicated team in Mauritius, that basically looks after the needs of your company. Some of the other things, which is really, really great is their fixed deposits, So say, for instance, you get a big supplier paying you this, like, for instance, today, you can actually put a fixed deposit in for a week, So listen, it's only like, say, 2 or 0.1 or 0.5%, but if you've got $1 million, for a week, and if you don't cancel it within a week and you don't need that money, they do automatic weekly rollovers. But the great thing is you can do weekly fixed deposits, but you can do also monthly fixed deposits as well. Another service that we use is for our employees, is like bulk salary payments. So what we do is you have a spreadsheet with all the final salaries. You send it to the bank and they do a bulk payment for you. So you don't have to go and capture every single payment. You can do audit trails and everything, which is really, really an amazing feature from the bank. Like I said before as well, the thing is, for me, it's like the worst thing, especially that we have sometimes with South African banks, is you don't have a personalized service, With Fraser, like I said, Colin is always there, or Ravi, and if I can't get hold of him, we've got a dedicated team that works for the company, in Mauritius. The last thing I just want to say, I know, Colin and Ravi, I'm a very demanding customer, and sometimes we do fight. But you know what? One thing that I can say is, believe me, I've looked around. I went to Mauritius, I went to the UK, I went, and that's why we're still here 10 years later. Dedicated service, always trying to help you. And listen, sometimes you can't do everything, but there's always a leading ear to say, listen, maybe we cannot, but we can do it like this way, or we can do it maybe this way, or we cannot do it that, or we can do this. And that is the great thing. They never say no. It's like, maybe if we look at it from this point of view, we can actually do this and do this. And that is the great thing, where you can have a successful business, and the bank can make or break your business. So from my point of view, thank you very much. Like I said, I'm not always the easiest and client to have, but the 10 years experience, I hope we have another 20 years experience, going forward. Thank you very much.
Jaco, thank you. That's most kind of you, and it's been a pleasure banking you and your group all these years, and we've never had a fight.
Never, Colin, never.
Okay, thanks again, Jaco. Perhaps if I could just ask the panelists to join me in answering some of the questions that have appeared in the chat box. There's a question. Mauritius is currently in a lockdown situation and borders closed. Do you have visibility on the reopening plan and resumption of flights from South Africa to Mauritius? Sashana, you're probably the most clued up on something like that.
It's not yet, but the government has set up a committee to look at this. And once a decision is taken, it will be communicated on different platforms and websites of EDB, the Mauritius Tourism Promotion Agency. So these are being discussed, but not yet decided.
But right now, the lockdown has been extended to the 31st of March in Mauritius.
Yeah. Yes.
Okay. Another question for Sashin. Why is the EDB promoting virtual currencies, but the Bank of Mauritius and regulators have not approved these virtual currencies?
Yes, actually, the EDB started what we call a regulatory sandbox license. It was introduced in 2015. And the regulatory sandbox license offers a possibility for an investor to conduct a business activity for which there exists no legal framework or adequate provisions under the existing local legislation within an enabling and legal environment in Mauritius. So, any person who has an innovative project for which there exists no regulatory framework at all, or existing supervisory infrastructure is inadequate for the implementation of such project, may apply for that regulatory sandbox license. So in relation to a fintech project, to be eligible for the regulatory sandbox license, the applicant must demonstrate that the product, the service or solution being developed is genuinely innovative, that they are using emerging technology or existing technology in an innovative manner in financial services, be it cryptocurrency, and that the project will contribute to the development of local skills. Once these are demonstrated, a regulatory sandbox license is issued. But one thing is important to also mention, that once the proper legislative framework has been put in place, that company issued with a regulatory sandbox license will be governed under the new provisions of the law.
Okay, thank you. There's a question here from Tony. There have been changes concerning the loop structures in South Africa. May we have more details on this? Keelan, you dealt with the loop structure earlier. Perhaps you could just add a bit more.
Sure.
And if it's just too much detail, maybe we can put you in touch with Tony directly afterwards.
Yeah, Tony, feel free to drop me an email. But basically, there is no longer any prohibition on loop structures. So an entity or a person resident in South Africa can hold their South African shares via a Mauritian entity. What we spoke about is that there are tax changes which mean that you cannot simply hold via Mauritius to reduce your South African withholding tax. So the tax changes say that if you hold more than 50% of the shares in the South African entity via your offshore entity, then you will not avail of the participation exemption when you receive the dividend back from the intermediary entity, and the dividend will be taxed at 20%. So that's to bring you back to the same tax position you would have been in had you held the shares directly from South Africa. Also, there are quite a lot of detailed disclosure requirements with the Reserve Bank. So you can go ahead and use a loop, but you have to disclose it to the Reserve Bank and you have to give them an update every year. And further, the Reserve Bank is quite clear that this cannot be used to retrospectively correct any loop structures you've entered into. So if you entered into a loop structure illegally, this doesn't magically solve your problem. You still need to rectify that. So I hope that's enough detail. We have written, I think, 3 newsletters on this over the last 2 months. So if you go to our website, reganvanrooy.com, and go on to tax news, you'll see them. Or feel free to email me directly for more information.
Right, thanks, Keelan. I don't see any more questions in the chat box, so I assume we have answered everyone's questions.
Colin, I see there's been one from Millicent on the tax of dividends in Mauritius. So maybe let's just clear that up. So first of all, foreign dividend receipts are taxable in Mauritius. There's 2 routes. First of all, you can apply the partial exemption regime and pay 3% tax, or you can pay 15% tax but claim foreign tax credits. And the foreign tax credits are very generous, so you can claim in respect of the withholding tax, but also the underlying corporate tax. So often your foreign dividends will be subject to 0% tax in Mauritius. In terms of Mauritian dividend receipts, as Millicent had said, these are subject to solidarity levy, where the total, when received by Mauritian resident individuals, not by Mauritian companies. So if a Mauritian resident individual receives a Mauritian dividend, if her leviable income exceeds 3 million rupees, she will be subject to the solidarity levy. So I think that's an important note. There are ways to work around that, but it is an important point about the solidarity levy.
Thanks, Keelan. I see another question has popped up. Can we have more information? Okay. I see it's. Can we?
Oh, yeah.
Yeah, on the robustness of the exchange of information between Mauritius and South Africa.
Yes.
Some years ago, there was a. Okay, Keelan, you deal with it.
I can answer that. So what we always tell clients is, assume SARS can get access to everything, and so there is a very strong exchange of information agreement between Mauritius and South Africa, and more countries are relying on this type of exchange of information, also with common reporting standards in Mauritius. There is the days where you could try to hide things from the taxman are gone. So we always tell people, assume that SARS can find out everything they want to know about what you're doing in Mauritius. It's not been proved in a lot of detail, but SARS has powers under both the Exchange of Information Agreement and the standard double taxation agreement between South Africa and Mauritius.
Okay, thank you, Keelan. Right, I don't see any further questions in the chat box. So it would remain for me to thank everyone that has attended this afternoon. I hope you found this useful and informative. And I would also like to thank my panelists, fellow panelists, Keelan and Sachin, and also Yaku for your time. Really appreciate your input. So that remains for me to say thank you very much to everyone and have a good afternoon.
Thank you, Colin.
Bye-bye.
Thanks very much.